Hey traders, welcome to Master the Market, where we help you become a market master. In today's video, I want to talk about my $1,632 profit in the stock bull. By the end of this video, you're going to understand the simple strategy that I use to trade this volatility halt breakout, and you're going to learn how I manage my risk when I'm trading a stock with this much momentum. Very quickly, before we get into the trade itself, I want to mention that we are currently running a $1 sale for the Market Master group. If you sign up using the link down below in the description, you'll be able to get your first month for just $1. That's going to include our group chat, our day trade and swing trade alerts, detailed trade plans, live custom scanner streams, and so on and so forth. This is limited to the first 20 spots only, and those are going to fill up very quickly, so make sure you use that link down below in the description to get signed up and come join us in the Market Master group. That being said, if we jump over here to the group very quickly, this is where this day trade in the stock bull actually started from. So I want to take a look here at the gappers channel. This is going to show us every morning the stocks that are gapping up and gapping down in pre-market. These stocks that are making these large moves in the extended hour session ultimately are going to be the best stocks to trade once the market does open. They already have momentum to the upside or to the downside, and they already have a lot of volatility and a lot of volume, making them really solid day trade opportunities. And we can see here that bull was the number 2% gainer about 30 minutes before the market opened, with a gap up from the previous day's closing price of about 103%. Now, once the market does open, what we do is we put together a list of the stocks that have the best potential for a gap and go, and we then share the opening range breakout levels for those stocks to watch for the breakout above that price and look for a continuation of that pre-market momentum. We can see that bull this morning had that opening range breakout level of $30.40. Now, the opening range breakout was actually not my reason for entering into this trade, so I'm going to zoom into the open here and just go over how that trade played out. We can see that this is where the opening range breakout actually happened. It started to move above the opening range breakout level at this point in time, and from there, it pulls back into those morning lows. Now, this might be looking like it would have been a losing trade, but the simple fact of the matter is that if you are trading the opening range breakout and you're using that opening range breakout for your entry, the way to trade this strategy is to use a stop loss that is going to be below the opening lows. So in this case, your stop loss would need to be under this low of $26.10. And in this case, it pulls back and gets pretty close to that price, but it does not go below. So you should still technically be holding on to this trade if you were buying into that opening range breakout, and we can see it very quickly would have turned back into a very profitable trade. Now, I missed that initial entry from the opening range breakout, so I actually ended up getting into this stock after this second volatility halt once it was pushing back up into those morning highs. And that's going to bring me to the strategy that I used to trade this volatility halt. I want to mention that all volatility halts are not built the same. I do not trade volatility halts very often. However, if there is a situation like we have here with bull, where the stock is able to halt up into morning highs or up into pre-market highs or up into some kind of key level on the chart, that is going to set up really nicely for the stock to gap up over that resistance and then squeeze higher once trading does resume. And that's exactly what we see happen here. So we can see that the stock does resume over the morning highs, and we can see it pulls back into those morning highs, holds them as support on this pullback, and then bounces right off of it and starts moving back higher. So what I like to do when I'm trading this type of setup is this is exactly what I want to see. I want to wait for it to do just that, and I want to chase the stock a little bit once it is showing signs of momentum after holding that breakout level as support. So I was buying a couple hundred shares here at about $35 per share. The reason I only bought 200 shares was because of the fact that I knew this was going to be a very volatile stock. I actually shared in the Market Master group at the exact same time that it is important to, have a wide stop loss for this type of trade. Risking at least $2 per share, in my opinion, is going to give you the best chances of profit for this trade because of that volatility in this type of stock. So because of that, I knew that I really only wanted to risk $400 or $500 on this trade, and that is how I came to only buying a 200 share position. Now from there we can see it pushes up and it has a few little pullbacks along the way, but the important thing to realize here is that each of these red candles is pretty much immediately bought back up. We see this first red candle, we have a small pullback. The following candle, we get a long lower wick, bounces back up, consolidates for a few minutes, and then squeezes up to new highs. The following red candle, we get a small pullback once again, and then immediately after, that dip is bought back up, ramps up to new highs again and again and again, up until this $50 area. Once we get to $50 per share, you have to keep in mind that that is probably going to be just a psychological resistance area. People are going to be looking to sell at $50, just like they would be looking to buy or sell at $1 or buy or sell at $100. Those round whole numbers like that a lot of times turn into these psychological key levels on the chart. So once we get that rejection from that area, I knew that this was going to be a good time to sell and lock in some profits, because that could have very easily been the high of the day up there on that spike, and we could have seen this start to fade back underneath the VWAP from there. So I sold a portion of my shares into this area here after we got this rejection candle from about 44. Even though it did squeeze back up, obviously hindsight is 20/20, so I should have in theory held on to those a little bit longer, but I sold a portion there, and then I sold the rest of them after it started to reject that $50 area. Again, locking in about $1,632 on this trade, while still only risking about $400 from that initial entry. So to kind of recap everything here with this trade, it's important to identify the type of setup that you have when you're dealing with a volatility halt. If the stock is showing momentum into that halt and it's trading up near the high of day or up near a key resistance level, that can then be a really great setup for a breakout once the trading does resume. That being said, if you are chasing into that momentum, it's important to understand what your risk level is going to be and how much you're willing to risk on the trade. So if you were only willing to risk maybe $100 on this trade, and you knew that you had to risk $2 away from your entry price, that simply means that your maximum position size would be 50 shares. That's how I like to keep my risk in check and make sure I have the right position sizing for every one of my trades, and it is something that I highly recommend doing for you as well. And last but not least, the most important thing here is trying to really maximize your winning trades. This is something that I'm still working on myself. It can be very difficult to hold through these little pullbacks, even though ultimately they do end up getting bought up quickly. And even though the trend is still holding to the upside, it is very easy to get shaken out of those moves. And the best way to maximize your return really is to kind of just focus on the bigger picture. Look at the overall trend of the stock and scale out of your shares slowly rather than selling all at once. That way you can at least hold on to a portion of your position as the trade progresses, and you really should be trying to hold on to the last of those shares as long as you possibly can until there is a clear reversal in the trend. So anyway, that was a recap of my trade here in the stock bull. Hopefully you found some value in this video, and if you did, please make sure to give it a like and subscribe to the channel. And remember, we are currently running that $1 sale for your first month of the Market Master group. So if you're interested in getting access to our group chat, our day trade and swing trade alerts, our detailed trade plans, our live custom scanner streams, and so on and so forth, all of that can be found in the Market Master group. There's going to be a link down below in the description for you to get signed up. Anyway, thank you again for watching. I hope you enjoyed, and good luck with your trading.